Hey, good morning, everybody. It's Hammer. Today is Monday, December 15th, 2025. I, of course, am Hammer, the founder of Originator Success, Grab and Go Social, and Rate Sensei. 3 products to help you to get more business in 2026. Remember, you can join me live each and every weekday morning, 9:30 a.m. Eastern time, talking about what's going on in the markets, specifically with mortgage rates and pricing. If you're here this morning, say good morning. If you are watching on the replay, don't forget, give me a hashtag replay in the comments. Let me know that you were here. Remember, if you'd like a quick reminder that I'm going live, you can go ahead and sign up for that at hmmr.io/reminder or use this cool QR code over here. If you're on your phone right now, take a screenshot, go to your photos. And I know this works on Apple. You press and hold, and it'll bring up the link, and you can go ahead and sign up there. Also, don't forget to sign up for our free email lock advice, ratelockadvice.com. It's an email to your inbox each and every weekday morning about what's going on in the markets, or you can use that cool QR code on the screen. Also, don't forget about our text alerts, www.ratetextalerts.com. You don't have to spend a lot of money to stay protected and protect your pipeline and stay informed. We send out a morning text, an afternoon text, and alerts if there is a concern about repricing. Go ahead and check those out. Also, I'm going to throw it up on my screen. If you want to sign up for our Originator Success Vision Plan Workshop, hmmr.io/2026-plan, or use this QR code right here. Again, if you're on your phone, take a screenshot, go ahead and go to the photos, press and hold. It'll open up the link. It is discounted for a couple more days. It is $67. It is a 3-hour workshop to be held on December 30th from 1 p.m. to 4 p.m. Eastern Standard Time, since we are on standard. So anyway, go check that out and learn more about it. Let's go ahead and say hi to the live folks. Who do we got here this morning? We have Megan Bissell. Good morning. Ron Siegel. Good morning, sir. Ron says today is National Cupcake Day, and as of yesterday, the beginning of Hanukkah. Latkes, that's funny. Nicole Semerad, good morning. Kenny Rivard, Holly Johnson, great to see you. Yasmin Martin, Allison Foy, Lisa Bollinger. Lisa says no sound. Anyone else having trouble with sound? Lisa, that seems to be just on your end. I know you won't hear this though. That's kind of that's the only one. Yo, eso sí que es. No, it's the only one. So, Michael Scott Love, good morning. Rate lock advice dispels the myth that you get what you pay for. Oh, that's so sweet. Thank you, sir. Mike Tebow, good morning. Mallory Fotiadis, Deb Richardson, Mike Brown, Sean Segaloff. Let's go ahead and throw it on there. We got Tim Klyla. Yeah, Ron, you hear me, which too bad for you. Tom Deadmore, good morning. Back in North Carolina. Are you visiting North Carolina? Are you from North Carolina? I thought you were from North Carolina. Brandy Brickler, good morning. All right, so I got a question of the day for y'all. If you want a question of the day, it's another music trivia. Hold on, I'm trying to find my notes here. It is, so what year was the summer that was the best days of Bryan Adams' life? It was the summer of this year. What year was the summer that Bryan Adams thought would last forever? And if I had a choice, I knew that it was gonna be, yeah, those were the best days of my life. I know I can't sing, but I could try. And if I played the actual tune, then it would get copywritten and it would get struck, and you wouldn't see it on YouTube. So there you go. That was an easier. Look at all those answers. Y'all got it. First one to type in was Lisa Bollinger. Lisa, I guess your sound came back. We got Megan Bissell, Brandy Brickler, Sean Segaloff, right? That's just an awesome song. Wasn't that a great song? That was one that was playing right before I started the show. So I decided to use that one today. A little bit of an easy one. So good for y'all. Good for y'all. All right, let's go ahead and get started. Go to the good stuff. I will throw that on there. Since it's National Cupcake Day, what's your favorite cupcake? Let me throw that as another question of the day here. What flavor is your favorite cupcake, and why is it chocolate? Yeah, I would go chocolate with the chocolate frosting, like just just chocolate that thing up for me. What's your favorite cupcake? Let me know in the comments, and I'm gonna go ahead and well, now we got everybody on here. We're gonna jump into the good stuff here. So let me go ahead and share the screen, show you what we got going on this morning, and let me move the luck comment here. All right, so taking a look here, Presentify. Let me fire that up real quick. Taking a look here, what we got going on this morning. Quick recap. Let's start off with a quick recap on what happened on Friday, and we'll go from there. So Friday was a weak start for bonds. You can see that more if we zoom in. I know I'm gonna have to refresh the page, but hold on, I'm trying to zoom in here. Why is this not? Oh, because Presentify is on. Okay. All right. Hold on here. So let's do. All right. Let me refresh this and we'll. Okay. So taking a look, Friday, you could see right here in the morning. Remember, we had a weak start for bonds. Before that, remember with the Fed meeting, we were down here. We had a nice relief rally. And we talked about this, that really it started right about here. This was the relief rally. That was because markets were excited that Powell was not more hawkish. It wasn't really a dovish Fed, but they were happy that he wasn't more hawkish. So that's kind of where we were at that point. And hold on, I'm going to put this up a little bit so you guys can see it. It's such a pain to move these sometimes. There. Oops. Come on. All right. There we go. So taking a look here and putting this up a little higher so you guys could see it. You can see, again, this was the relief rally that we had post-Fed meeting, and then we started to lose ground. Friday, we lost ground early, and then it was flat the rest of the day. So it was really kind of quiet. Today, rate sheets are going to be similar to Friday. Maybe they should be better. If you take a look here, let's put this on the 2-day for a minute, and you'll see it a little closer. Pricing came out right around 10 a.m. here, and we are up. If this were to hold, this little spike, we just went up 7 basis points. But before that, we were up about 3 or 4 basis points. But overall, I mean, you're talking here, we were around 100.97, and then we were like 101.07. So we're up about 10 basis points from when pricing came out on Friday. If this holds going into when rate sheets come out in another 20 minutes or so, that would see stronger gains. Otherwise, we should be at least a little bit better. You can see that lift right here. We should be at least a little bit better going into it. And for today's calendar, there's really nothing of merit going on. However, this is a busy week, and I'll talk about that in a minute. But today's calendar, nothing of merit going on that should affect things. It should be a quiet day. Reprice risk on the day is low. It's not likely that we're going to see things get too much worse. Could see bonds drift a bit. You know, right now they're up about 7 basis points as we see here. Nothing to get super excited about, but we could lose ground a little bit. Could fall back down. Could even go down a few basis points on the day. But we shouldn't see any real sell-off and shouldn't be in a position where lenders are in a position to really reprice. Where, so if we take a look at the 10-year Treasury yield, 4.16, 4.15, 4.16, it's still above that 100-day moving average. Let me move this over so you guys can see this a little bit, and I'll show you what I'm talking about here. So, no, I didn't want that. I want this. Okay. So this 100-day moving average, this green line right here that you see, that, remember, for bonds, bond yield, we want this to go down, right? So for the 10-year Treasury, we want that to go down. That's a good thing. That would give us a happy thing. And this is going to act as resistance, but it could not act as support last week when it did end up below that. It actually pushed up, tested it on Thursday, but Friday it blew right above it. You can see right here, blew right above that. So now this is actually a resistance level. If we were to see this come down, it would probably bounce off of there. And that's why we're watching that. As far as mortgage-backed securities and the 5.5 coupon, and it doesn't matter which coupon you guys look at. Seriously, y'all, like sometimes people get more worried about that. It doesn't matter. Look at the 5, look at the 5.5. generally, I think I'm looking at the 5.5 for consistency right now. I think that that's just fine. But taking a look at that 5.5 coupon and where we're at, we're messing around. We're testing those levels right here. The red line is the 50-day moving average. It's a stronger level than the blue line, which is the 25-day moving average. You could argue that we're currently testing this 25-day moving average today. That will be at 101.02, and that you could argue that the 101.06 is actually a resistance level that we're not going to improve past this. So we will see. We're definitely staying right around these levels. We'll have to see where we're at. So as far as actual lock advice, I'll throw that on the bottom of the screen. Make sure you answer what's your favorite cupcake flavor. I'm going to replace that with the lock advice. So less than 15 days, consider locking. If we take a look at what's on this week's calendar, tomorrow we got BLS jobs data. There's a lot of risk to that. And I'm going to go into more of this in a minute, but tomorrow we got BLS jobs data. And then we also have retail sales. So that's going to come out early in the morning. So if, depending on how it comes out, right, we could argue, well, if it shows labor market weakness, we may see at least slightly better pricing. By the way, this is November's data. That's why I've got November in parentheses here, because with the government shutdown, we were kind of catching up and missing. We did that September, October stuff. We got September data. A lot of October data is gone in the winds. This is November data that we're getting. So it will be more updated. It will be more accurate. We could see a pretty strong reaction. Again, the reaction will come at 8:30 in the morning Eastern time before rate sheets come out. So that's why I'm going to, just protecting the current pipeline, because if that does not show labor market weakness, we could see a negative reaction in bonds. How negative? That's arguable. I don't know that it'll be terrible. I don't think we're at risk of seeing a real big sell-off, but does it really, if you've got loans closing between now and, basically Christmas, you don't want to give somebody a Christmas present of worse pricing, right? Nobody wants to do that. If you need to buy some time, if you've got loans closing a little further, I don't think that we have a lot of risk, but there's definitely some risks. Now, on Thursday, we're going to get the CPI data. So that's the Consumer Price Index. And let me show you guys the screen for a minute, and I'm going to show you some things. And Ron, stick around because this is a good question. Tammy said, what numbers are expected from the BLS? Tammy, I am not sure. I haven't really looked that closely yet to see. Hold on, I'm putting your question up here. So I'm not overly, I'll have a better idea for you. But actually I won't, because it's tomorrow morning. But let's see. So what I wanted to show you guys is, so I should have changed these in here, right? So the BLS jobs data, you can check the schedule and the release date. We can see that it releases tomorrow, 8:30 a.m., and that is November data right here. So we see that nice and clear. These are all the revised news release dates following the government shutdown, right? So we see kind of when things were expected to have been released over time and when they're coming out. So all of the data, a lot of data is coming out, in December that was expected. And then finally, when we get back to January, we'll see, we go back on our regular track for the CPI and for the employment situation as BLS jobless claims. It's the non-farm payroll stuff, all the stuff we usually see. So they call that the employment situation. That's when we see non-farm payroll, unemployment, wages. That's the employment situation. So what is expected? Not quite sure. I'd have to, let's look at Mortgage News Daily and see. Let me make this a little bit smaller. Let's see if they have that on the economic calendar. They probably do. So tomorrow, jobless claims, unemployment, they are estimating forecast 40,000 and a 4.4% unemployment number. So according to MBS Live, we are looking at which is a very low number. especially considering the previous was 119,000. So it's expected to be a very low number, and it shouldn't be hard to get by that. But if it does come in much higher than that, much stronger than that, that's a big deal. That's kind of why that is a low number, and it shouldn't be hard to see more than that. And if we see 80 or 120, you're likely to see a negative reaction to that. All right. Because more jobs created, more non farm payroll, that's a stronger employment situation. And that's not necessarily going to be favorable to us at all. So keep that in mind. Now, what I also wanted to show you guys, and this is a little bit more confusing. Bear with me a minute. I just have to adjust the screen size. So on going back to, and Ron's also agreeing that he would lock everything. I said about floating some of the stuff that's got time. I'm not too worried about it. If it's risk averse, then think about it. Anything that's closing the next couple of weeks, so I would definitely lock. Just too much volatility. But stuff closing in January, I'm not too worried about. And then, yeah, Tammy said, Ron, you said 40,000 plus, but I don't. Oh yeah, there it is. That's the same number that we just had. And Mike Tebow said he believed that it was 30,000. He had seen that from a different source. It's not that that's wrong. It's just that it's a different source. So you may see, Bloomberg's number and some of the different economist numbers and things like that. So, but taking a look, let me go back and show you the PCE. So Thursday, we definitely get CPI inflation data. All right. Sorry, the tabs are so small at this point. I just got to find. All right. So we're definitely going to get the CPI number for consumer price index. That one comes out right here, December 18th, which is on Thursday. And that's a gimme, right? So we've got that. Now on Friday, everybody's talking about the PCE, including it's on Yahoo. So here it is. On the Yahoo calendar, they show. Hold on, we got to go get to US again. Oh, there it was. Nope. I wish there was a filter. There might be one. I just don't know where it is. So if you take a look, this is the Yahoo Finance calendar, right? So Yahoo Finance economic calendar. They're showing PCE and core PCE and all of that stuff here. They're showing, and it's not 1:30 Eastern, it's UTC. So they're showing it on the, this is for Friday the 19th, which let me pull this over so you guys can see what. Okay. So they're showing for Friday the 19th, they're showing that. However, I don't think that's actually the case. Let me make this full screen. This pissed me off. Where did it go? Here it is. Let me make this full screen and let me get my head out of the way so that we can see this better. Okay. So taking a look here. However, when you take a look at the BEA, the Bureau of Economic Analysis, this talks about their economic release schedule. And when we look at the PCE, it says next release to be rescheduled, and they do not have the date. And it says that the current release was on December 5th, which we did have. So this is to be rescheduled. And what we have scheduled for December 19th at 11 a.m. is the trimmed mean PCE. And this is not the PCE that we normally talk about. And that's what's confusing about this. I did not even know that there was a thing called the trimmed mean PCE. It's from the Dallas Fed, and it's their breakdown of data. And it's a totally different thing. Let me get my head out of the way and we'll go over this again here. Hold on a minute. All right. So the trimmed PCE comes from the Federal Reserve Bank of Dallas. And basically they're reinterpreting data is what it is. This one is generally the last Friday of the month, released around 11 a.m. by the Dallas Fed via the Fed database. This is not the PCE that we normally watch. We're normally watching the main PCE with all the bigger data and all this here. And that's usually what we're watching. And again, if I were to click this, which I'll click it and come back, this is not it says to be rescheduled, and it's not on that date. I do not think this is the full PCE. I think this is the trimmed PCE. Now, is it data? Yes, it's data, but it's not the data that markets are looking at. So I'm not trying to, I don't know. Ron, I don't chat in the box with anything on MBS Live. But maybe you can check into it with them and see. I don't know why MBS Live. I think they're just pulling the same data that you'd be pulling from whatchamacallit, from Yahoo News, right? When you look at Yahoo and you see it right here again, Yahoo is showing it, but I don't think. And when we look here, all right, hold on a minute. There it is. So when we take a look here, you could see that that they're calling for it on Friday. Hold on. Why is that on top of that one? Okay, this is just getting annoying now. There we go. This week. Okay, so he's calling for the PCE and core and everything on Friday, but I don't see that. I don't see that happening. So anyway, I'll see if you guys have made any comments on this. And Ron, you got any insight on that? Anyone else have any insight on that? Let me know. I just know Ron likes to follow this stuff. So I don't believe this. I'm not buying into this yet because I think it's the wrong data, which is understandable. We've never talked about this whole trimmed mean PCE before. I mean, I've never seen it mentioned before. This is the first time I've ever heard of it. So I don't think that markets are going to I don't think we're going to see that much attention to it, because if I haven't heard of it before, it's not what everyone's looking at. We've always tracked the main one, and that comes from the BEA, not from the Fed Reserve. And that one shows that when we take a look here, that it is to be rescheduled. It does not show that it is coming out on this weekend. It shows that the trim is coming out this weekend. So that's what we got. Yeah, Ron says, all right. So Ron says, I've seen October, November PCE and core PCE are both due on Friday. I've seen that on 2 sources so far. Definitely going to have to get more info, because I'm going right to the actual source right here for these. Here, I'll just go back on this so you guys can see what I see. Right. So, I mean, taking a look here, looking at the Bureau of Economic Analysis, and they showed this did update last time to be December 5th, and it shows the current release was December 5th, but and that was the September data, right? And then it shows to be rescheduled. But if it was going to be this week, I would think it would show up here, but I could be wrong. But we don't have, when the dates were. And, but like I said, but I do see this right here and this right here. So they come out the same day on this time, but it doesn't usually. But maybe that's what we're seeing. So we'll find out. We'll have more this week. Yeah. Ron said their website might be as accurate as their data. Exactly. That very well might be the case. So, all right, my friends. Well, anyway, that was a long time for me to explain a silly thing. So it is great to hear all of your favorite cupcakes. I'm going to save us all the effort, though. I'm going to catch y'all tomorrow, and I hope you have a fantastic day. Tomorrow we'll be talking about the jobs data, and we'll see how the market is. So make sure you do join me tomorrow. We will see what's going on with that jobs market, how markets are affected, how rates are affected. For today, should see some decent rate sheets. Go ahead and consider locking near term and risk averse. Stuff that's longer, I think you're okay floating, but we'll see where that goes. All right, everyone, make it a great one. I'll see you tomorrow. Bye-bye.